I'm going to show you mathematically why infinite banking is the key to financial freedom. And I don't want you to simply take my word for it. I want you to trust the numbers and trust the math and see the truth for yourself. My name is Elridge and my partner and I lend over $2 million a year on single family real estate. We've helped several members of our community reach their first $100,000 in liquidity to begin practicing infinite banking. And in this video, I'm going to show you the problem you're facing and why infinite banking is the solution. So stay with me until the very end, because once you see the numbers, you'll understand why this strategy is life-changing. Let's begin with the reality you and I are both living in: inflation. There have been countless studies that prove one simple truth: your earned income is not keeping up with inflation. But before we go deeper, let's define it clearly. Inflation is the general rise in the price of goods and services over time. When prices rise, your money buys less. Your purchasing power shrinks. Think of it like this. In 2015, a cup of coffee at a local coffee shop cost $2. In 2020, that same cup of coffee cost $2.50. By 2025, that same cup of coffee costs $5.25. The coffee hasn't changed. The size of the cup hasn't changed. What changed was the value of your money. It now takes more dollars to buy the exact same thing. Here's the problem. If your income is not rising at the same rate or faster than inflation, then every year you are falling behind. That's why you may feel like your paycheck just doesn't stretch the way it used to. Now here's where the math comes in. You have to figure out how much money you need to break even. First, we have to ask, what is the actual percentage of inflation each year? Some sources would tell you 3%. Others say it can be as high as 10%. For this example, let's use a middle ground, 7% annual inflation. Now the question is simple. How much do you need to earn just to break even? Just to keep your same lifestyle? There are only two ways to do it. Your income after taxes must increase by the rate of inflation, or your return on investments after taxes must match or beat inflation. Let's pause here. This isn't about getting rich. This is just to not get poor. It's just to maintain your current standard of living. Let me give you a reality check. Suppose you earn $100,000 per year. Inflation at 7% means you'll need $107,000 next year just to buy the same groceries, pay the same bills, and live the same life. At first glance, that doesn't sound too bad. You might think, I'll just ask for a 7% raise. But here's the trap: taxes. If you're taxed at 30%, every additional dollar you earn doesn't stay in your pocket. You only keep 70 cents. So if you need $7,000 more intake, home pay, you can't just ask for $7,000 more in salary. You actually need to ask for $10,000 more, because taxes will eat away $3,000. That means your salary has to jump from $100,000 to $110,000 just to break even. Not to move forward, not to grow your wealth, just to stand still. The formula looks like this. Required raise equal open parentheses current income times inflation rate close parentheses divided by open parentheses 1 minus tax rate. So plug it in the numbers. Your current income $100,000, inflation rate 7%, tax rate 30%. Required raise equals $100,000 times 0.07 divided by 1 minus 0.30 equals 7,000 divided by 0.70 equals $10,000. So the math proves it. If inflation is 7% and you're taxed at 30%, you'll need a 10% raise to stand still. This is why relying only on a paycheck is dangerous. Inflation and taxes work together against you. You're running faster every year, but you're stuck in the same place. That's why so many people turn to side hustles, investments, or passive income, because if you don't, you will always be behind. Guys, if you want to know all of the strategies we are using to beat inflation, join our free finance community. The link is in the description. Now let's take a look at investing. Here's the scary truth. If inflation is 7% and you're leaving money in the bank, you're actually losing money, even if your account balance goes up. But even if you're investing, the math can still be brutal. Let me show you. Suppose you invest $100,000. Inflation is 7%. So your money needs to grow to $107,000 in 1 year just to maintain your purchasing power. Now let's say your investments earn 10%. That means your $100,000 grows to $110,000 before taxes. Looks good, right? But then taxes showed up at 30% and you don't get to keep the full $10,000 gain, you only keep $7,000. So what did inflation do? It stole $7,000 of buying power. So at the end of the day, after inflation and taxes, you didn't move forward. You just broke even. Now let's cover the break-even formula for investing. The formula here is break-even return equal inflation divided by open parentheses 1 minus the tax rate close parentheses. So if inflation is 7% and your tax rate is 30%, you need a 10% return just to stay even. That means if your investments are earning 5% or 6%, you're not actually getting ahead. You're quietly falling behind. This is why so many investors feel stuck. They see their portfolio go up, but in real terms, they're trading water. In today's economy, knowing your break-even point isn't optimal, it's survival. So far, you've seen how inflation and taxes erode both your income and your investments. Now, let's talk about the solution, infinite banking. Here's the key. Where your money lives matter. Where your money resides matter. In my opinion, I use an index universal life insurance policy. Since 2020, my policy has averaged a 6% return every year. Here's the best part. Those returns are tax-free. Think about that. If inflation is 7% and my policy generating 6% tax-free, I'm almost breaking even automatically just by storing money. And that's before I even do anything else. But infinite banking isn't just about earning interest. It's about borrowing against your cash value and putting that money to work. Here's what I do. I borrow against my cash value at 5% interest, then I lend that money out at 13% through real estate deals. What does that mean? Inside my policy, I'm earning 6% tax-free. On my lending, I'm earning the spread or arbitrage of about 8 to 9%. Together, I'm not only keeping up with inflation, I'm beating it significantly. And this is the power of becoming your own bank. You stop paying interest to the banks and instead of redirecting the flow back to yourself. Now, let's take a step back for a moment. The average American with a college degree pays around 34.5% of their lifetime income to interest on mortgages, credit cards, student loans, car loans. If you could redirect even a fraction of that back into your own banking system, your own bank, you'll transform your financial life. This is why infinite banking works. It's not about chasing the next hot stock or cryptocurrency. It's about controlling the flow of money, eliminate losses, and compounding wealth in your favor. So here's the takeaway. Inflation and taxes are enemies you can't afford to ignore. If you rely only on your paycheck, you are falling behind. If you invest without factoring in taxes and inflation, you're trading water. But if you practice infinite banking, you position yourself to beat both. At Vertical Capital, we practice what we preach. We borrow from our policies at 5% and lend at 13%. We store wealth in tax-advantaged vehicles and we help others do the same. So if you want to learn more about how to apply this strategy in your own life, join our free finance community. The link is in the description. And I'll leave you with this thought. Smart investors don't just look for returns. They look for strategies that generate tax-advantaged growth above inflation. Whether that's real estate, private lending, leveraging retirement accounts correctly. It's all about where your money resides and how you put it to work. Infinite banking is just not another financial trick. It's a proven system that allows you to store wealth safely, grow it tax-free, and then multiply it through smart lending and investments. That's the math, that's the truth, and that's why infinite banking is the key to financial freedom. If you found value in this video, like and subscribe and help us reach 5,000 subscribers. I appreciate your time.